Welcome back to Studio 701. It's National Hat Day, but Jeff forgot his.
Mine's on the table. I'll get it back on here in a minute. But in today's Ways to Save, Ways to Spend, hat wearing, Brooke Johnson is a financial services representative and branch manager with Capital Credit Union. She joins us now. Brooke, nice cap. Love it.
Thank you.
Thank you for joining in on us. I love the national days, so we're all about it. Anytime we can implement that in the show, so thank you for being a good sport.
Did you dress your dog up yesterday?
What?
Did you dress up Chewy?
No, because I didn't know until it was too late. And so, I mean, if it's not on Instagram, did it ever happen? So I need to work on that for next year. But Brooke, you're talking about home equity loans and what some of us call HELOC, but home equity lines of credit.
Yes.
Can we just start out by having you explain the difference between the two?
Yes, so a home equity loan is going to be a one-time installment loan. You're going to borrow the exact funds you need right away. And then the home equity line of credit, or HELOC, you have a 5-year draw period on it. So you can borrow, pay the line down, borrow some more. And then your payment is just determined based off of the rest of the term of the loan.
And Brooke, how can people use that equity in their home to benefit themselves?
Yeah, it's great for, with the collateral, using your home as collateral, you're gonna get a lower interest rate than you would on, say, your credit cards, things like that. You can use it for home improvements, so maybe you wanna update your kitchen or do some things that you just haven't gotten to. That home equity is a great way to take advantage to get those things done. You can absolutely use it to purchase a second home or a vacation home. Typically, again, your interest rate on a home equity loan would be cheaper than, like, say you were putting a mobile home at the lake. Mobile home loans just have higher interest rates, so it's a little bit cheaper that way. And then debt consolidation is a huge one. Maybe you did your home improvements on your credit cards, and a lot of those credit cards out there, you're paying 25% interest on them. On the home equity loans right now, our HELOCs are starting at 3.75%, so you're saving a ton of interest by consolidating that into whether it's the line of credit or the closed-end loan.
Brooke, are there any tax benefits with interest on a home equity loan similar to, say, like a mortgage loan?
You know, I'm not a tax professional, so I have no idea.
Fair enough.
How about as a homeowner and I come in and I say, I don't know which one would be best for me. How do we come to that conclusion? How would you help me with that?
Yeah, absolutely. We would discuss your situation. So you and I are going to talk about your needs, what your wants are. And then from there, I have some members who they just want to consolidate the debt, pay it off, and be done with it. So the closed-end loan is just better for them, especially if you're more is better for discipline, because once you pay it off, it's just done. That line of credit, if you say you have a $50,000 line, you pay $20,000 down on it within that 5 years. That $20,000 is available to you to borrow again. Now there is pros in that, because maybe you've updated your kitchen and now you want to update your bathroom or your flooring. That line is still open, so without having to go through the application process again, have any further closing costs or fees for doing the loan, it's there, and you just give me a call and let me know to transfer that money to your checking account so you can go and spend it.
Are you seeing a trend right now at all, more people looking into this sort of thing, maybe because they are stuck at home more right now during the pandemic?
Yeah, it's a great way. I mean, especially people aren't vacationing much, but it's a great way to pay for those vacations. But I think there's a lot of people who are doing home improvements right now just because they're stuck at home and they have time to do it.
Mm-hmm.
Yeah, I've been trying. I got a Roomba. That's about as far as I've gone right now, but plans for the future. Anything else, you know, what are some commonly asked questions that people have when they come in and they're like, I want to do this, but I'm really not sure? What kind of questions do you hear?
Yeah, usually, honestly, I'm going to say people don't necessarily come in for a home equity. They're giving me a call and tell me that they want to do different things. And the first question I'm going to ask them, do you own your home? Do you know roughly what your balance is in your home? Because if you have a lower balance, I can look up the tax statement and see, you know, we'll take 90% loan to value on that, subtract your mortgage balance off of it, and that's how we determine what your equity is. Usually the turnaround time on those, we can turn them around in a week to 10 days. So it's not a super long process to have funds out and available to you. And then we just discuss, you know, if it's going to be a line of credit, what are the balances on those credit cards that we're consolidating, and just gathering that kind of information.
So there's no appraisal or anything? You go off of the tax value?
As long as the tax value is high enough, it's sufficient for us. In the event some people will know that their appraisal is higher, or maybe they've just built a shop, so we will go the appraisal route, but it's not necessary at all.
Okay.
Okay. Well, thank you so much, Brooke. Some great information there.
Thank you guys for having me today.
Yes, thanks a lot, Brooke.
This has been Ways to Save, Ways to Spend, and for more information, make sure you go to capcu.org.
Coming up next.